Everyone was wrong about oil. What am I talking about? We'll get into that today. This is one of the most important commodities in the entire world. It affects everything, not just your gas, but of course, everything going through transport. It is reliant on what happens in the price of oil. Saudi Arabia is doing one thing, China is going in this direction. We got to pay attention, all here today. My name is David Quintieri, and what I do is bring you the truth about what's happening in the global economy so that you know exactly what's going on. But I don't bring you all that jargon and all that nonsense. I make it real simple. Why don't we get into this right now today so you can learn about what's going on and then make better decisions for yourself, for your family, for your retirement. Let's go. First thing, oil pipelines hike rates by a record as red hot inflation bites. So I wanted to make this clear that if you look at it, in every case, we are seeing high inflation. You might not have even thought that this could exist, but here it is. The cost of moving oil on pipelines crisscrossing the US is surging by the most ever as operators pass on the higher business expenses to their customers. And so here you go. We anticipate a portion of the hikes will ultimately impact prices at the pump and be passed on to consumers, but doubtful that they will be significantly impacting refining runs and so on and so forth, okay? So interest rates has an impact on this factor. I mean, think about it. Did you ever consider that before? That they are going to pass it on to their customers. Now, that's not you directly, but you see one down the line, you get hit with this. And is it going to reverse? Come on. We all know how this works, okay? Maybe it goes up 2 steps and it comes down 1, all right? Forward 2, back 1, however you want to look at it. That's the way it always seems to be, and the inflation becomes entrenched. It never goes away. Since 1970, we have watched the prices escalate well beyond anything we've saw, basically for a century prior. And what was different about that? Of course, 1971, Nixon pulls the world off the gold standard, and suddenly debt accumulates like we have never seen in history. And it never stopped. That's the weird thing about it. Even through the 1980s, as interest rates rise, you saw what was going on, and it was historic because prices were still elevating. 90s they were elevating, 2000s they were elevating. It just never stopped, and that's prices of all types of goods. Very strange. So what's going on here is just one aspect, and let me show you some others. Goldman Sachs slashes year-end oil price forecast to 86. So the previous was 95. And now they're saying 86. Who knows what's going to be at the end of it, but why? Not necessarily a slowdown, but as it sees higher supply from sanctioned oil exporters, namely Russia, offsetting the recent OPEC Plus and Saudi cuts amid potentially underwhelming demand. So you've got slower growth, that's part of it, but at the same time, Russia is still exporting to countries like India, and they are just buying more and more. So they're dealing with that in that way, and as a result of this, that's the total supply. It's affecting the total supply. So you see that has an impact on the price, no question. Commodity cheerleader Goldman Sachs said its forecast for major rises in raw materials this year hadn't panned out so well this far, but coupled that assessment with another call for a major rally. Bulls like ourselves find comfort in the fact that end-use demand across the commodity complex has not shown recessionary signs and investment in supply remains elusive. But this misses the point that we were wrong on our price expectations. So at least they admit that. I wanted to show you this. It's the commodity spot index. And we are at levels you haven't seen since 2021. It's been going down consistently. You can argue right along with interest rate hikes. You increase interest rates and you will have an impact on everything, in this case here, commodities directly. Do you see what's going on here? I think it's pretty clear. You can create a slowdown by simply increasing interest rates. Something pops eventually if they keep it elevated for a while. Right now, the stock market is just chugging along, going up, and real estate basically doing the same thing. It's, in some areas, it's certainly off the peak, but overall is doing very, very well. But you can see commodities, and they're showing some, some would argue, deflationary signs as well. But they're coming off of these extremely distorted highs, So we're finding balance. Where it goes from here, that all depends. There we have it. I want to show you part 2. And then, of course, in part 3 comes the best part. Save the best for the last, they say, right? By the way, when you're eating, do you save the best for last? I really like to know. I certainly do. I like to do that myself. Some people like to eat the best first. Some people like to save it for last. But I'm interested what you think. Put it in the comments below. Let's have that discussion, all right? Germany warns of industry shutdown if Russian gas stops flowing. Here we have it. I mean, I think that's pretty clear. It doesn't need any further explanation. There's no question. You made yourself so reliant on Russia, and then you said no more. Well, what do you think is going to happen? This is crazy to do that. This is bad for you, the individual. If you're in Germany, if you're in Europe, and your country was doing that, you should have been pushing back, saying, hey, stop this. We've got to get our own energy online. We're becoming so reliant on this one. We can't do that. Just like right now, wherever you are, if you've got not just, let's say with oil, yeah, that's one thing, but where is that oil then refined to become a product that you use? You see, maybe the refinement takes place outside of your own country. You might say, that's not good. I don't want that to happen, because what if suddenly there's a disruption? What if it's a natural disaster? It doesn't have to be some war or conflict or something. That's why we have to understand that, there has to be some level of independence going on. Sure, you can trade, you can do it, all of that. That's fantastic. Some people think you shouldn't do any trade, which is just absurd. But you got to watch out there, especially if it's something so critical like this, like energy, paying a big price. The summer's gonna, before we know it, summer's gonna be over, and they did not fill their stockpiles. Germany's regulator warns the energy crisis is far from over. This is what I'm talking about here. You've got to get those storage facilities up, and they're saying they're at 70%. But I'd like to see them get their situation in order, regardless, as fast as possible. And this is where we get to some interesting stuff. China's drills in deeper waters to cut reliance on foreign oil. Do you see what China's doing there? They are trying to make that happen, saying, okay, we see what's going on. We see the writing on the wall. We want to get this handled, at least some of that. We're going to drill, and we're going to go into areas that are more difficult, because that's what's necessary to make this happen. All right? So I think there's a big change going on with what's happening here with resources. Now, we're going to look at the next aspect right here. And I want you to pay attention. Look here. Pakistan paid in Chinese currency for discounted Russian oil. That is just inception going on here, okay? Pakistan is paying in Chinese currency for discounted Russian oil. Russia is willing to do a discount on their stuff. They're saying, okay, we're sanctioned. We realize that, so we're going to have to put a little discount on it. And that's what India loves about it so much. But they're paying in Chinese currency. Pakistan paid for its first government-to-government import of discounted Russian crude in Chinese currency. People say, nobody wants the Chinese currency. They're willing to do business in it. Not like maybe percentage-wise, okay, sure, but they're willing to do business in it. This is one example. Discounted crude offers respite as Pakistan faces an economic crisis with an acute balance of payments problem, risking a default on its external debt. The foreign exchange reserves held by the central bank are scarcely enough to cover a month of controlled imports. So they've got their own problems there, but you can see. And of course, they might be holding dollars. They might be holding Chinese currency as well, and so they balance out which one do we want to hold, which one do we want to get rid of, okay? It's not just a one-sided argument. Profiting from sanctions, shipping premiums surge for Russian oil. Russian business shields bolder tanker owners from global rate pullback. You can see that here. Russia has really, I don't know if I want to say totally benefited from the circumstance, but they're selling more than they ever have before. I mean, it's unbelievable. We're going to put sanctions on you, and they're economically, in this aspect anyway, they're doing better than before. I mean, it's wild to see it all happen. That connects me in with this. US shale still not convinced to invest in more growth. Do you see what's going on here? US shale, this is supposed to be the big thing that was supposed to make the US independent in energy. And this is what's going on. I think it is concerning because this was supposed to be the big thing. And it's still happening, of course, there's no question. But they're not advancing this. They're not making more. They're not doing this over and over again. Why? Because they're saying potentially the price could go down. We don't know what's going to happen with our industry. It's going to take years of development to expand it. What's going to happen in 3 years? Is the president, is the Congress going to allow it? Are they going to outlaw it? Are they going to add further regulations, making it more difficult? What about the usage of oil? Is it going to go down? I mean, there's so many questions here. And this is part of it, okay? I think it's important to see the world geopolitically, how it's changing. At the same time, the usage patterns of these different energy, maybe they're going to say you've got to have, 40% of your usage in green energy by this year, and then the following year needs to be 45, and they might put all these restrictions in. So companies are going to have to, even if that means they go bankrupt, even if that means that they have to pass higher prices onto their consumers, they're going for this, the climate agenda and all this that are forcing the companies to utilize this in a certain way. And by the way, you'll be charged carbon taxes. It's already happening in Canada, other places. So the carbon taxes are here. They're coming for other areas where you're just going to pay a higher price as a consumer. So get used to it. That's what they're telling you. You will eat the bugs and you will be happy. All right, windfall tax to be scrapped if oil and gas prices fall to normal levels. So again, taxation being used. I just want to show you this is for the UK. But you can see that there. I think though, you've got to pay attention to the information, see this stuff, and then as a investor, a potential investor, what can you do? And that's what I talked about in this video right here. There's different things happening all around the world. You could be taking advantage of that. And this video right here describes this. I explained it all very simply. Click on this video. I'll see you there.